Welcome, welcome, welcome. I'm so excited that you guys are coming to this podcast today. I have an amazing guest named Michael Bedford. I can't wait to share it with him. But first, before I do that, now you're going to you need to stay on because this is going to be an incredible talk about the American dream. And the American dream in our community is something that we are trying to get our arms wrapped around because for some of us, it hasn't been the American dream all this time. We are having a housing summit. So, a Black Wealth Housing Summit, and that is going to be on June 19th. So, June 19th, I'm going to go ahead and show you a flyer right now just so you can see it. So, it's the Black Wealth Housing Summit. It is on Juneteenth. So you make sure you have this date saved. It's from 5:30 to 7:30. It's going to be at Cross Purpose. This address is 3050 Richard Allen, but it is on the corner of Colorado Boulevard and MLK. Most of you know that if you're from Colorado at any amount of time, there is an AME church on that corner. It is in the same parking lot as that church. So you go past the AME, turn to the left a little bit, and you will find Cross Purpose. We are going to talk about down payment assistance programs. We're going to talk about that today. You're going to learn about credit. You're going to see what the real estate agents know that you don't. We're going to walk you through a plan. Hey, we're even going to provide you dinner. The theme is, whose mortgage are you paying? And if you go to blackwealthexperience.org, you'll be able to RSVP to this event and make sure that you're there. So we want you to be there because whose mortgages you're paying is super important because we don't want you to be paying somebody else's. And I give this example at the beginning of every single one of these podcasts. Imagine, and you can probably see this, if you're paying $2,000 a month rent at an apartment or a house or somebody else's unit that you're renting. You do that for 12 months, then you paid $24,000 that year to live in somebody else's unit. You times that by 10 years, because I know a lot of you have been living in your spot for about 10 years. You have now spent $240,000 on rent for the place that you are now living in. That is somebody else's. And if it's an apartment complex, 10 years ago, that unit probably cost less than $240,000. So you actually paid off their unit that they're going to continue to make money on. If it was a house that you rented, if they bought it for $500,000, you paid off half of their mortgage that they had on that unit that they paid. So our goal is that you're paying that yourself. We're going to match you up with a financial advisor. We're going to match you up with a real estate agent. We're going to match you up with a loan officer like myself. Whether it's me or somebody else, we're going to make sure that you get with somebody. We're going to make sure that you have some financial planning. We just talked to a tax person that helped you with, a whole bunch of information on taxes, and we're going to hook you up with an insurance. We are going to put a plan together for you. So when you walk out of there on the 19th, you will have not a complete plan because we don't have enough time in 2 hours to get every single person a complete plan, but you'll know what direction who to call and how to get it done. So one of the things that has happened in our community over the last, I don't know, couple hundred years or 100 years or 50 years for sure is this myth about what it takes to do home ownership. I did a podcast this morning with a brand new homeowner. She's been a homeowner now for 4 days. She is a grandma. And she told us that she came up with a number in her head that it would cost her in order to own a home based on her previous experiences with her family, with the people that she grew up with, none of them owning homes. So she decided in her 20s home ownership was impossible and came up with this number of money that she would have that she just made up out of the blue in order to be a homeowner. And now she's a grandma that owns a home now. And when you watch that video, it's emotional. You'll come to tears on it because you just realize that we don't know what we don't know. And one of the reasons that I have Michael Bedford here today is because he has a program called the American Dream. The American Dream is something that we all can access, that we have access to. And I'm telling you, that person who told you have to have 20% down in order to move in a house, they don't know what they're talking about because there are ways for you to get into a house. So Michael, welcome to our show. I want you to kind of at first give, how do people get a hold of you? What's your numbers, whatever those things are, emails, whatever you want to share. So somebody watching this can write it down now, because I don't want them to be trying to figure out how to get a hold of you while they're listening to you. So they need to write it down, know that they can go back to it, know that it's there. And then as soon as you're done with that, let's start talking about the American dream and what that means. And you maybe give a little bit of your story. I know you grew up here in the Denver area. You're a native just like I am. And what has happened? I mean, your story, if you've been doing this for 24 years now, what has been the most impactful thing for you before we get into the actual product? Let's get to know you a little bit. So welcome, Michael.
Wonderful. Brian, I appreciate the opportunity. It's a privilege as well to educate all walks of life and our people where the dream of home ownership or owning it is possible. A kid that quote unquote grew up in the hood. If you know where Curtis Park is at, the projects, I started my humble beginnings there, and then I moved up the street to Scott's Market, right there in the community. If you know where Manual High School is at and Cole Middle School, in between those streets, mom being a single parent, raising us 3 kids, and I realized for myself that I want to take us, quote unquote, out of the unfavorable neighborhoods and somewhere better. And that avenue was buying a house. And I couldn't live on the south side of Martin Luther King and Park Hill because the home prices increased 40,000. So my first house that I owned was right there on the corner, 36 in your door. I purchased a house approximately 76,800. Interest rates at that time was 13.5%. And when you put that in perspective, as I tell ones, you still want to own.
Absolutely.
Because you're building your legacy wealth. That same home now is over $600,000. And then in turn, you have someone else paying rent, perhaps $2,800. And then that house allowed me to purchase other pieces of real estate. So if a Denver native, a kid from the hood is able to own a home, and I tell ones, you have to start somewhere. No matter what the rate, no matter the price point, the key is you definitely want to invest in you, invest in your legacy wealth, and then pass it on to others, such as your family members, your spouse, your kids, your significant other, or what have you. So knowing that educational piece to say, okay, what products and programs are best suited for me? Everyone has a story. Everyone has a journey. Doesn't fit the box exactly. But when you share that with a professional, he or she should be able to give you a blueprint of success, a blueprint as to how can I own, even if it's not today, next week, next month, years. I tell ones, hey, I'm your financial priest. Tell me the truth. Tell me everything. So then we can devise a business plan so you can eventually own. Whether you're 18 or older in age, you can own. So even it may not be a desirable neighborhood initially, but it's not an end all. You can always post up, so to speak, to take that house that you purchased, the equity that has been gained over the years, and then purchase another piece of real estate and build your portfolio that way. So knowing the program that US Bank happens to offer, this is a good fit where this is exclusive in the sense that not everyone has this product. This is a product where it allows 97% financing, minimum FICO score of 640. There's no mortgage insurance. So therefore, you're not throwing away your money where you have to have, quote unquote, 20% or 80% equity in the house where you're not paying mortgage insurance, period. This is whether it's a single family residence, townhome, condo, manufactured. There's no reserve requirement. All you have to have is basically $1,000 invested in the transaction. If you notice that number there, US Bank is going to give one $10,000, 0% interest to help you get into the home. And that's a significant dollar amount, knowing that you're not paying mortgage insurance, 97% financing. US Bank's going to give you $10,000. And all you have to do, of course, is complete the home buyer education,
Mhm.
course. Takes you about 45 minutes, which is very beneficial for that home buyer. Therefore, we get your certificate. Your DTI, debt to income, is around 43%. Okay. And
Okay.
then interested parties are able to contribute up to 6% of the sales price, which a lot of people didn't even realize that. And of course, it's not on the flyer. That's why you have me to help educate
I
them.
love it.
So a seller, the builder, even the real estate agent can contribute up to 6% of monies that's going to be used to the borrower's closing costs. So in other words, there really isn't no reason or
No.
reasons for ones not to own. And then, of course, gifts. Those are acceptable from the spouse, the child, the fiance, your domestic partner. That's huge.
Mhm.
And then, of course, if you have a business relationship with US Bank as to a checking or savings account, we're going to give you additional $1,000 to be used towards your closing costs as well.
Oh,
So when
okay.
you have a professional such as myself or others like you, including realtors, the deal could be structured where the seller can contribute some money to the transaction. The realtor, he or she may decide, hey, you know what? I want to be a part of this history as to assisting my client. I want to contribute X amount of dollars. You never know, the other party as well too may want to do the same. So this product not only becomes the American dream, it becomes a reality of one's owning their home and someone else doing it for themselves.
That's great. I have a couple questions as I'm hearing this, and you're telling me that the bank is willing to give somebody $10,000 to move into a house.
That's
Not
correct.
you got to come up with 20%. We're willing to help you, and I'm sure there's neighborhoods that this applies for or whatever in the state, but it's $10,000. And then you said if you have a relationship with the bank, is that like an account? Is there like a amount of time they have to have that account with the bank to get the other thousand for closing costs? Or
Yeah, so typically if they already have an account established with US Bank, if they don't,
okay.
typically they open up a checking savings account, $100,
Hmm.
and then therefore that relationship is established with US Bank, preferably 2 weeks prior to closing.
Two
Then we're
weeks.
gonna give them additional $1,000, and of
All
course
right.
that is on the closing disclosure as well. Because sometimes you wonder, well, what kind of relationship we're speaking about? Are we doing business? So
Yeah. Perfect. Okay. Now you also mentioned a word called mortgage insurance or MI. And I think a lot of people are hearing about it. And I've even had people say, well, I don't want to get a house if I have to have mortgage insurance. And no, I agree. You don't want to, but it's one of those means. Can you kind of explain what mortgage insurance is and how it works?
yeah, so mortgage insurance is almost like car insurance in the sense that somebody has to be protected. So if you don't put down, let's say 20%, the lender,
Hmm.
okay, will say, well, if we happen to foreclose on this home, we want to be made whole. So the lender would say the borrower needs to pay the mortgage insurance because there's not 20% equity. Because typically, if the banks or financial institutions have to regain or repossess that property, you have fees that's incurred. Well, court fees, attorney fees, got to pay the taxes, insurance, and then homeowner insurance as well too, which is typically 20% average. So
Hmm.
therefore, that's what mortgage insurance is, and they have the consumer or the borrower pay for that. I tell ones with not having mortgage insurance, you like to do surgery twice or once. You'll say, hey, let's do it once, let's get it right the first time. Here, you're having a loan that does not have mortgage insurance. Yes, the interest rate is slightly higher. However, you're not throwing away monies. And of course, right now, today, homeowners could go ahead and write off a percentage of that mortgage insurance, the mortgage that they've been paying,
Hmm.
as far as the interest dollar amount on their taxes year over year over year. So knowing that you got a strong competitive rate, no mortgage insurance, US Bank's giving you $10,000. You perhaps could add another $1,000. There's $11,000. 0% interest, because of course, typically when people speak about down payment assistance, there's a percentage that's going to be higher than 0% to borrow those monies. And here, US Bank says, hey, we want our $10,000 back only when you happen to refinance or sell a home, and it's still at 0% interest. That is huge. That is significant.
That is major huge, because that means if you live in the house for 5 years, that you're not paying any interest on that $10,000 that was given to you. And then basically you've made that much back in equity, and then you're able to sell that. You sell your house, you give US Bank back the $10,000, but not $15,000, because you had $5,000 of interest in it. And so it allowed you to get into the house, which is what we're talking about, the most important thing. And that's why we want you to come to the summit on June 19th from 5:30 to 7:30, so you can learn these principles. It's not about just getting this information. This is great information for Michael and I to disseminate to you today. But there's something about being with a team of people that is walking you through the process. Because what most people do, I was looking through some of my school books, from going to college, that happened to be in my attic. I don't know why I kept them, but I'm looking through my notes. I didn't use any of those notes. I was just notes that I took. I didn't have action or apply any of that information. And so why we want you to come to this summit, because we want you to have a house, if possible. Some of you guys are ready right away. Some of you guys, it's going to take 6 months. Some of you guys, it might take a year. Some of it might take a couple years. But when you find out that there's programs around like that, like my friend that I was telling you about, had she known that there was a possibility of her owning a home in her 20s instead of as a grandma, how much difference has her life changed without this number that she threw up? And so we're giving you a number saying, 10 grand, depending on how much we need, at a 97% loan, is going to get you a pretty good size house. Now you're going to have to qualify to make that payment and those types of things. And I'm a lender and Michael's a lender. But the reason that I'm asking other lenders to come onto my podcast is because I want you to have a home more than I want to do the transaction. I need you to have a home more than I need Brian to do the transaction. I'm going to get loans. I'm going to be people in the community, but I don't have this program at my bank, because I don't have, I'm a lender that is a mortgage lender, not a community bank. And this community bank is in your neighborhood saying, we want to give you $11,000. 10,000 of it towards the down payment, and another, 1,000 or, towards closing costs. So we need to figure out what that gap is for you, but you need to come on that day to help us help you figure out. So you go to the blackwealthexperience.org and click on RSVP. We're going to feed you dinner. You're going to be excited. Michael, what else can you tell them about the urgency of trying to get into a home now versus spending another year trying to rent somewhere, even though where they're renting might be in the perfect neighborhood that they want? Why is it more valuable to get in now and get going? Why it's now, and not, we got to wait for the interest rates to go back to 2%, or we got to wait because, we don't have enough money for a down payment. Kind of walk us through why it's so important to do this now.
I'm sure many have heard the phrase, and maybe not, yesterday's price is not today's price. When you happen to Google or speak to professionals, when you look at any cost of goods or items or even interest rates, they continue to steadily climb, they continue to increase. So that house that perhaps you're interested in, for an example, $300,000, if you research it, average homes in the last 5 to 10 years have increased historically anywhere from 8 to 12% average from coast to coast. So let's say that house that you want to buy $300,000, well, you wait next year, now that house is $330,000. And then of course that interest rate that you were speaking about a year ago that was at 4.5%, well, that rate today is 6.5%. So that's a significant jump or increase, not only far as the real estate, but then also far as the cost of paying for that residence. So everybody wants to go ahead, I would think, buy low instead of buy high. But if you happen to hold out and wait, let's say a year later, then that perhaps will allow your price point to decrease.
Mm-hmm.
So that house that you perhaps were qualified to purchase $300,000, now you're looking at 250, 260. And that doesn't make financial sense. And I share with ones, do not be that individual that walk over dollars to pick up nickels and dimes because they're shiny.
Mm-hmm.
I'll say that again.
I
Do
love
not
it.
be that individual to walk over dollars to pick up nickels and dimes because they're shiny. Because all too often, we're waiting for a sign. We're waiting for the circumstances to be better. I don't know what's going to happen. But life still continues to progress.
Mm-hmm. Absolutely. And I hear this conversation on these interest rates all the time, well, we need to wait to go back. And I say, well, let's say it's at 6% today. Yes, 2 years ago, that was a great time and you could have got it for 4%, but you didn't and you waited. So now it's at 6%. So we don't know. I wish you and I could look into this crystal ball. We would be having this conversation. Well, we would having a conversation on a different level because we'd be billionaires if we could predict this stuff. But we can't. And so, but if interest rates go down, say in 5 years, and you have your house now, so you got your house at 6%, they go down in 5 years, back down to 4%. We can refinance back to that lower interest rate. So that 6% now, like the scenario you used, and then say 5 years from now it goes up to 8, and you wait and you don't get your house now, and it goes up to 8%, and the house went up in value. Now you're buying your house at a higher interest rate for more money because you didn't act right now. So we have something for when interest rates get lower. What we don't have is how are we gonna make sure you qualify and get into a house 2 years from now, 3 years from now, if you waited when you didn't have to. And we may figure it out, but you're going to probably pay more. And so there's such an urgency right now of the ability where there's programs are around that allow you to get to have 10 or $11,000 towards, because maybe mom doesn't have 10 or $11,000 to help you out with. Well, if this program goes away in 2 years, now mom's probably still doesn't have 10 or $11,000 to give you, and now you're stuck without being able to buy a house. Whereas now, person after person after person that we're working with, there is this ability, there is a commitment in our communities and our society right now to get to, especially on the, I'm not saying, not everybody, but especially for African American, brown and black folks, there is a charge right now to make sure that our home ownership statistic goes up. Because right now we're about 36% of eligible folks in the Denver area that have homes that are African American. That's the same statistic as in 1980. We haven't moved the needle. And so now there is this push that we need to move the needle. Our Hispanic community is at 47%. Our other communities, our Asian communities, are at 60 or 70%. We're sitting at 36%. And there's homes available and there's ability available. This American Dream program is something that you can call, you want to call Michael and say, what do I need to do to qualify for it? If you want to call me at some point and say, what do I need to do to qualify for any loan? I'm going to put you together and you're going to come on the 19th with a real estate agent, with a loan officer, with a financial advisor, with an insurance person, and with a credit person. We are going to put a plan together because this statistic needs and has to go up as far as I'm concerned in my lifetime. And so, Michael, is there anything else that you want to add to this conversation before we sign off? Or
No, I value some of the points that you made mention of. We've had clients for the reason we assisting them with that process of credit repair to say, hey, look, this is what you need to do to put yourself in a better position. And even if you don't close with myself or Brian, the key is, once again, as you stated from the early beginnings, own a house. We just want to see you win. It doesn't touch our souls even more to see that, hey, one is a homeowner instead of a renter, and that they're investing in themselves. Because the two biggest purchases, is a vehicle, which many have achieved that goal. And then, of course, one that is very attainable, very realistic, is home ownership. Because at the end of the day, you're going to make a payment to someone.
You are.
Whether you're going to make a rent payment, mortgage payment, but you're going to make that payment to some financial institution. And I would think, why not make that payment to you because you're going to benefit for it, short term and long term.
Absolutely. And I say this at every meeting, the first step to personal wealth and generational wealth is home ownership. Everything changes in your life. And you go back and listen to the podcast that I was talking about, the young lady, her name is Median. Listen to that podcast and listen to her, what she says about her mindset, about who she is as a person, what it is that starts creating wealth. She is now already thinking, 20 years ago, she didn't think she could own a home. Now she's thinking about what's that next investment going to be. And same thing, Michael grew up in the projects, and then projects wasn't home ownership. And then when he was able to buy his first house, then it opened up all the doors for more investment properties, more. He got into a neighborhood that may have not been the houses that he exactly wanted, but probably today, 24 years later, he's living pretty much where he wants to live. And that started with the personal wealth. And then we're going to start talking about generational wealth at some point, where we're going to talk about how do we pass these assets down without the state taking control, or how do we utilize some of those, maybe the equity in our home to help our grandkids out. That's going to be part of the conversation that we're going to start to have. But right now, the conversation is you need a home. I hate driving into, Michael, I go to these apartment complexes because Denver's building 1 million of them, right? Because they know people are going to rent them. And I see a Cadillac in there, and I see a Range Rover, and I see a what are some of the other ones, a Mercedes in there, and a BMW in there. And sometimes I'm in the mornings and they're sweeping off the snow because they don't have a garage. And I think about myself as that this is an asset that somebody most likely, and not in all cases, but I would say in most cases, didn't believe they could own a home, and then went to get the car because the car is something that they enjoy, with the consumership of it, but the car depreciates, right? I don't know one BMW that's worth that was 5 years old that's worth more now than it was 5 years ago. They are depreciating assets, and folks aren't living in their cars. They're paying that money for a $80,000 car payment at $700 or $800 a month, and they're paying another $2,200 a month for rent, and all that's just going away. We're at $3,000 a month. And the other thing that we're going to show you is you think you don't have, disposable income, but we're going to start talking about that a little bit. We're going to talk about the places that you're eating. We're going to talk about the Starbucks hole, of the amount of money, because a lot of them think I don't make enough money. In most cases, what we're talking about with some of the things that we have, you probably make enough money. So, Michael, thank you for being on today. Please tell us how to get a hold of you again right before we close, and then any lasting comments that you have.
Yes, you contact me at 720-418-7450.
Okay. Perfect. All right.
Appreciate the opportunity, and thank you so much.
Absolutely. Thank you for having us on. We're going to have you on again. We're going to do this again in 6 months and see where people are at after we started to be able to help them. So thank you again for being on, and we will close with just knowing, go get a house, please.